picture this, a world where greed isn't just good, it's basically the absolute law of the land. A world of dizzying highs, staggering wealth, and complete, unhinged chaos. Today, we're going to trace the timeline of the unbelievable financial empire built by Jordan Belfort. We're going to completely deconstruct the anatomy of this fraud, tracing exactly how a young guy went from a tiny apartment in Queens to commanding an entire army of aggressive stockbrokers. It's a linear, wild ride of extreme excess, brilliant, but highly illegal sales tactics, and eventually a frantic race to hide all the evidence from the federal government.
Okay, let's dive into this. How in the world do you make $22 million in just 3 hours? I mean, you don't just wake up one morning and pull off a heist of that magnitude, right? It takes a very specific system, a cutthroat environment, and a sequence of incredibly calculated steps. To understand this massive windfall, we really have to go all the way back to the beginning of the plot.
So here's the roadmap of how this criminal enterprise actually escalated. We'll start with the penny stock discovery and the birth of Stratton Oakmont, look at their notorious bait-and-switch tactics, break down that massive Steve Madden IPO, and then watch it all collide with the FBI before ending in a desperate plot to hide money in Switzerland. Our story kicks off with Jordan Belfort as a newly licensed broker at the very prestigious Wall Street firm, L.F. Rothschild. But his timing literally couldn't have been worse. On his very first day as a licensed broker, the entire market crashed. It was Black Monday. The Dow dropped over 500 points. Rothschild completely closed its doors, and Belfort found himself out on the street looking for a job. Desperate for work, he stumbles into this small, low-rent, Long Island bucket shop called the Investor Center. Now, what's really interesting about this slide is the sheer financial incentive that hooked Belfort right away. On traditional Wall Street, you've got brokers selling legitimate blue-chip stocks, right? And they make a tiny 1% commission. But inside this Long Island boiler room, they were selling these obscure pink sheet stocks, and the brokers were pocketing a massive 50% commission on every single trade. For a money-hungry young broker, that math is just absolutely irresistible. Basically, they were pushing penny stocks. These are shares of really small, super volatile companies that don't even meet the requirements to be listed on major exchanges like the NASDAQ. We're talking stocks trading for mere cents. For example, there was a company called Aerotine that was trading at just 6 cents a share. Belfort took his polished, high-pressure Wall Street pitch and applied it to these literal penny stocks, easily convincing unsuspecting blue-collar workers, plumbers, postmen, that this tiny investment could pay off their entire mortgage. He started making cash hand over fist, but he quickly realized he needed a much bigger target. See, Belfort knew the wealthiest 1% were never going to buy penny stocks from a low-rent strip mall brokerage. So he leaves the Investor Center and recruits his hometown friends, guys who, up until then, were selling meat, tires, and weed. To trick wealthy investors into trusting them, he gives this totally rough crew a complete corporate makeover. He rebrands the operation with this incredibly prestigious-sounding name, Stratton Oakmont. It sounded like old money. He basically told his brokers that this name alone would make clients assume their roots were deeply embedded in Wall Street. And this whole transformation was driven by a philosophy he picked up from an early Wall Street mentor, Mark Hanna. The quote here captures it perfectly. "Nobody knows if a stock is going to go up, down, sideways, or in fucking circles." The goal wasn't actually to build a real portfolio or help the client at all. The goal was simply to keep the client on the Ferris wheel, constantly reinvesting, while the brokers skimmed off that cold hard cash via commissions. This ruthless approach completely fueled Stratton's culture. We're talking a relentless sales floor and extreme drug use, mountains of cocaine and quaaludes just to keep the machine running. But how exactly did a room full of hometown guys with zero actual financial background convince the wealthiest people in America to hand over their fortunes? Well, it all came down to a brilliant, highly deceptive script. So the crucial point is this 3-step bait and switch Belfort meticulously crafted to hook these wealthy investors. Step 1. The brokers cold call these rich individuals and exclusively pitch super familiar blue chip stocks, companies like Disney, AT&T, Kodak. It establishes total trust and legitimacy. Step 2. Once the client is comfortable, boom, they execute the switch. They unload the garbage penny stocks where the firm takes that staggering 50% commission. And finally, step 3, when a stock goes up, you never let the client cash out. You pitch them a brand new special situation so they reinvest immediately. The client feels incredibly rich, but the gains stay strictly on paper, while the brokers walk away with millions in real money. And the success of this system, it was literally astronomical, $49 million. That is what Jordan Belfort personally took home the year he turned 26. Just think about that for a second.
This incredibly aggressive system funded a lifestyle of absolute chaos and excess. Private jets, massive mansions on the Gold Coast of Long Island, a 170-foot yacht, his own helicopter, and a drug habit big enough to tranquilize a small city. Now, Stratton Oakmont was incredibly profitable, but Belfort wanted more. He wanted real legitimacy. To get Wall Street to stop seeing them as just a glorified bucket shop, the firm had to evolve from simply selling stocks to actually underwriting them, creating public companies from scratch. This brings us to the IPO, or Initial Public Offering. An IPO is basically the very first time a private company offers its stock to the public, which means the underwriters get to set the initial price. So Stratton Oakmont decides to take a red-hot women's shoe company called Steve Madden public. But, and this is a massive catch, Belfort and his partner Donnie actually secretly owned 85% of Steve Madden's company by using friends to act as fronts. This secret ownership set the perfect stage for some truly massive market manipulation. Which brings us right back to our initial question. $22 million. Belfort whips his brokers into an absolute frenzy on the trading floor, getting them to aggressively pump the Steve Madden stock price. They open the stock at $4.50 a share. Within 3 minutes, it's trading over $18. Because Belfort secretly owned 1 million of those shares, this totally artificial price surge generated a $22 million profit for him in just 3 hours. But look, a fraud of that sheer scale doesn't just go unnoticed. You can't flash that kind of extreme wealth, pull off massive IPOs, and blatantly manipulate the market without drawing heavy federal attention. The SEC started making regular visits to their offices. And then, much more dangerously, the FBI arrived. Specifically, Agent Denham. The walls are slowly starting to close in. The FBI actually issues subpoenas for Belfort's wedding videos just so they can identify his inner circle and key associates. The SEC is physically in the building, sitting in a freezing conference room going through files. And this brilliantly illustrates just how arrogant Belfort had become. He actually invites FBI agent Denham onto his 170-foot yacht and heavily implies a bribe, dressing up a $500,000 payout as a stock tip. Well, Denham completely refuses, and this blatant bribery attempt just throws gasoline on the fire, intensifying the federal investigation into Stratton Oakmont. Knowing the government is now literally breathing down his neck, Belfort has to act fast. His entire massive illegal fortune is at risk of being seized by the U.S. government. So the plot shifts. He desperately needs a secure, offshore haven with incredibly strict bank secrecy laws. To bypass Swiss banking laws, he needed a very specific tool, known in their circle as a rat hole. A rat hole is basically someone who holds stock or physically smuggles money under their own name to hide the true owner's identity from the authorities. Because the Swiss bank would only protect accounts that weren't directly tied to a U.S. criminal investigation, Belfort specifically needed rat holes who had European passports. So he uses his British Aunt Emma as the primary account holder, and then recruits his drug dealer Brad's wife, Chantal, who was of Swiss-Slovenian origin, to actually transport the cash. $20 million. That's the staggering amount of physical cash they had to move. We're talking money literally strapped to bodies, stuffed into suitcases, and systematically smuggled across international borders into Geneva over multiple trips. It was a massive logistical nightmare, completely hidden off the books, all just to secure Belfort's paper wealth inside a European vault. Let's move to and see how this builds, because this entire paper empire is about to suffer a catastrophic, rapid collapse. It starts on a night of celebration. Belfort and Donnie take these highly potent, expired Lemon 714 Quaaludes. 90 minutes later, the delayed fuse hits. It's a completely chaotic, drug-fueled night where Donnie nearly chokes to death and Belfort absolutely wrecks his car. The very next day, a super paranoid Donnie causes a scene that gets Brad, their key cash smuggler, arrested by the police at a shopping mall while holding a briefcase full of money. A few weeks later, Belfort's lawyers advise him to step down and take a deal with the SEC to avoid jail. He holds this big farewell speech, but at the very last second, his ego completely takes over. He reneges on the deal and refuses to leave Stratton. And then months later, the fatal blow strikes. Aunt Emma, the primary holder of the Swiss bank account, suddenly dies of a heart attack. So what happens to a paper empire when the money gets trapped overseas?
It's the ultimate cliffhanger. With Aunt Emma dead, $20 million is suddenly locked in a Swiss bank, sparking a frantic, desperate dash to Monaco before those funds are lost forever. It's the absolute linear collapse of a financial empire, one built purely on bait-and-switch tactics and absolute greed, inevitably crushing itself under its own weight.